Hello traders, it is Sunday, April 5th, and I thought I would do a very quick video. I'm still looking for some naked put rights, and I'll continue to do that probably for the next month and a half, as long as option implied volatility stay very high. This is the strategy that you want to use. I see a lot of people out there trying to jump the gun. No, this is just a bounce. I'm going to buy some puts. No, this is the start to a new V rally. Buy calls, buy calls. Folks, if you're trading options, you should not be buying premium. That is absolutely ridiculous. So please, for any of those traders who think that they can buy premium in this market, let me try and dispel that notion. I'm going to put up the VXX very quickly, and I'm going to show you a classic example here. You can see how the VXX spiked dramatically to multi-year highs from multi-year lows, and it peaked at about 75 or so, and you can see the steep pullback, and now the VXX is starting to compress. But after a big pullback, that is about a 33% pullback to its current level. Let's overlay the SPY, and that helps give us a more clear picture of what's really going on. Big market decline, huge spike. So now look what happened. You've got this initial drop in VXX, and it's been going sideways, but what's the market been doing? Market's been going down. Well, gee, shouldn't VXX be going up when the market's going down? Yes, it should. The fact of the matter is it's barely able to tread water, which tells you how lofty option premiums are at this stage. They're still super high. This is a premium selling environment, and this bottoming process in the S&P 500 is going to take time. We're going to see moves up that look fantastic. Oh my God, we missed that entry point. That's going to be a great buy, and we're going to see big sell-offs. Oh my God, here comes the next wave of selling. It's going to be back and forth. So, from a swing trading basis, the only thing you can really do right now is wait for clarity. And the key to that is time. We need to let the coronavirus settle down. We think we're going to see the apex in the next 7 to 10 days here in the US. That will help sentiment dramatically. But we have to get through the virus before anything else matters. And all the economic data points that have come out this week are grossly understated because federal agencies can't keep up with unemployment applications. So the point is, you need to stay sidelined right now. Distance yourself from the action by selling out of the money put premium. And that's what I'm going to be doing in this video right now. So let's take a look at the market very quickly here, see what's going on. This is the S&P 500. You can see how we sold off dramatically. That low was a week ago Monday. So we put in a really nice solid rally a week ago, and then this week we pulled back a little bit. So that was the pullback on Wednesday. We had almost a bullish engulfing pattern. This tail actually did not exist. That looks like a bad data point in there. This was almost a bullish engulfing pattern, except it didn't quite make it to the low of the prior day. And then we had an inside day pretty much right here on Friday. So this pullback did find support. Now, we're going to see lots of horrible news, absolutely horrible news for the next week, maybe the next 2 weeks. Might this be the bottom right here? Probably not. I think we may sneak down, have an intraday low, but I am expecting a higher low, which would be nice. It would be the first step in a bottoming process. We've got earnings coming out. They'll start in about 2 weeks or so. Corporations are not that impacted this quarter by coronavirus as they will be the next quarter, and the guidance will be non-existent in many cases. So we need that clarity. We don't know how quickly the economy is going to rebound. We don't know what consumption patterns are going to change. People have been out of work. They don't know when they're going to get their checks from the government. They're going to keep their spending habits to a minimum until they start generating some income again, until they actually get back to full employment. So there's going to be a bottoming process here, and it is going to take time. So we're going to see ups and downs and ups and downs. And what happens during all that process? Option implied volatilities continue to contract during that bottoming process. And while all this herky-jerky price action is going on back and forth, we're going to capitalize on that huge option implied volatility. And we're going to do that by selling out of the money inflated put premiums on stocks that we would love to own, not here, but at a 20 or 30% discount from the current price. And if we don't get assigned, we're going to collect that income, and then we'll move on and we'll move on. Over the course of the next month, month and a half, we'll start getting news out, and then we will get more aggressive. We'll sell closer to the money put premium with the hopes of getting assigned. And if option premiums come in enough, we may even shift to call buying. But that is a month and a half or 2 months away. That is not now. And this is not a good entry point for a lot of stocks. We don't know how all this is going to play out. So please be cautious and know that I'm using this strategy on select stocks that have gone through a heavy screening process, that have fantastic balance sheets, and then we're taking advantage of these inflated premiums. I am not, and I repeat, I am not selling put spreads or naked puts on airline stocks, on hotels, on cruise lines. Absolutely not. We have no idea of how those industries are going to fare and when that demand might possibly come back and what credit issues might lie ahead between now and, say, 3, 4, 5 months out. So we are going with a sure thing right here, right now. Companies that we know are going to be able to generate income, companies that we know are going to be able to generate cash flow. I'm using a version right now called Option Stalker. This week, I should be launching my new website. There will be Option Stalker. That's really for swing traders. And then I'm going to also offer Option Stalker Pro. Option Stalker Pro has everything Option Stalker has, but it also includes the chat room. It includes some day trading searches, and it includes shorter time frame variables. Well, what do I mean by that? If I go into custom search, you're going to see that we have the H2, the H4, and the D1 searches for all the criteria. Everything in the lower part of the table is available. The only thing that you'd be missing is M5 to H1. And these really are day trading variables. So that's who really needs this the most. And Option Stalker is going to be offered for half of the price of Option Stalker Pro. So if you are a swing trader, I'm going to show you how easy it is to conduct end of day analysis and to find these opportunities. What I'm not going to get too heavy into right now is earnings. My God, this custom search engine is unbelievable for finding earnings trades before and after. And we can search for companies that are about to report and companies that have reported in the last 2 or so weeks. Whatever the time frame is that we would like to define, we can do it. So we can find these stocks. And as earnings season unfolds, I'll show you how we're going to be using this to find really good put writing candidates. So for right now, I'm going to go in, I'm going to mark trade signal bullish across these time frames. So this is the proprietary trade signal by one option, and I'm going to go into strength versus S&P 500, and that will be bullish for H2, H4, and D1. And I'm going to click liquid options because we all want to trade liquid options. And I'll put in an option liquidity rating of 2, and let's see what comes up. So we've got quite a few candidates to pick from. We don't have 500 candidates that we have to sift through. We've got a handful, a couple of dozen stocks. So I've gone through and I've done some of the research on these stocks, and there are actually about 4 or 5 of them that I really like in this list, but I'm going to zero in on one because I've already done the background check on it. And here's how you can check the balance sheet very quickly. For instance, one of the stocks on here that I'm going to highlight is GILD. And if I want to, I can go into Stock ER and I could do my fundamental analysis here. Here's who the company is. Here's what they do. You can see all the key ratios, the growth rates. You can see the technicals and how they shape up. You can see the fundamentals, how they shape up. You can see these are very important numbers. Cash per share, is critically important because I've been highlighting it recently. And you can see debt per share. This company is a biotech company, and they have almost enough cash per share to pay off all of their debt. That is a very, very strong cash position. I've had people ask me about RCL and CCL, the cruise lines. Go check their balance sheet. See how much debt they have. Check an airline. See how much debt they have. That is not the kind of business we want to be in right now, with super, super high debt and absolutely zero cash flow. Those are prime for failure unless they get some massive kind of government bailout, which they're likely to, but I'm not going to count on that. I certainly don't want to count on it. And if the market does have another big leg down, if we do take out the low from a week ago Monday, you're going to see those stocks get pummeled. They are going to lead the way down. I don't want to have anything to do with them. I do not want to sell naked puts on those. So I can't stress that enough, because I have people all the time asking me every day, oh my God, I sold some naked puts on RCL. What should I do? I can't give you any advice on that. I don't like the stock. I wouldn't be buying the stock right now. Which, by the way, if you do have positions that you put on that are losers, you must have a game plan before you get in the trade. You better have a stop in mind so that you know when you're wrong and you know when you got to get the heck out of that trade. And if you don't have that when you're putting trades on, then you're going to put yourself into a world of hurt when those positions move dramatically against you and you don't do anything about it and they continue to move against you. So always have a game plan, always have a stop, always have a target. For these naked puts that we're going to be writing, it's easy. What's our stop on it? Zero, nada, nothing. We want to buy the stock. We hope we get assigned on these stocks, because if we do, on a fundamental basis, that is going to be the best possible entry point we could ever hope for. So we don't have a stop on these. We don't need a stop. We're talking a 30% drop from current price levels. So we've got the forward PE of 11.3 on Gilead. So that is actually a very reasonable forward PE at this current price. We have an extremely strong balance sheet. If I want to, I can click View Press Release. This is going to give me their last earnings report. We could do this for any stock. So you can go through, see what the guidance is, see what the news is. Check out the stock fundamentally before you sell any naked puts. You must want to buy the stock. That is critical to every one of these. So make sure that you want to buy this stock long term. Gilead, I like it. I would like to buy it long term. Do I think that Gilead is going to be hurt by the recent coronavirus? Heck no. They're going to be helped by this. They're trying to find a vaccine, just like every other biotech company, and they've got a war chest because they have a lot of cash on hand and they have a steady revenue stream from their existing products. And you can see here that the stock has been very volatile. It has not tanked like the rest of the market has. I'm going to do an SPY overlay. Look at the market sell-off. This stock, from where it was back when the coronavirus sell-off started, was right here. This is where the stock is now. It is rallying when the market is selling off. This is the kind of stock that we want to own. So this is not willy-nilly happenstance. I kind of like this one. I heard some good things about it. Lift up the hood, look at the company, research the company, look at the balance sheet. That's what you have to do. We'll go into the M5 chart. Actually, let's do an M15, and then we can see what the stock has done this week. We've had heavy market selling this week, and you can see the stock actually finished higher this week. Those are all good signs. That is relative strength. Put the 1 OSI indicator up. Orange line above 0 indicates relative strength. You can see, yes, it dipped below it just a little bit on Friday, but overall, very good relative strength. Put up that D1. You can see it's been strong relative to the market. All you have to do is widen the time perspective a little bit and know that, based on the other chart I showed you, the market's been down dramatically in the last 2.5 months. This stock is actually trading higher. So it has great relative strength. So now, what do we do with this information? If I look at this chart, I have to visually identify where would I want to buy this stock? Where do I see this stock as being an exceptional value? Well, we've got the 100-day moving average here at 68.40. That's not too bad. We've got the 200-day moving average right around that $67 level. It's actually at $66.70. Okay, well, 66.70 also takes me to this horizontal resistance level, which we had a breakout before coronavirus, and then that served as support. So we have multiple lines of support running through the 66 level. That is a major, major support level. Well, what is $66 relative to its current price? We've got the stock at $78. So it could drop almost 20%. And we'd still be okay. We would be scooping this stock where it was before the coronavirus, and it's got the possibility for perhaps a vaccine or some type of treatment. So I see this as a really solid play. I'm going to put up my trade pop up here. We're going to take a look at what option premiums we have. I'm going to hover over the last date, 5/7/2020. So we know that we have options that will expire before that 5/7 date. So we've got a May 1st expiration that we can use. We've got an April 24th expiration we can use. Let's go into the May 1st because we can go out a little bit in time here, try and collect as much premium as we can on this play, and let's see what we can get down to the $66 strike price. We want to keep the short strike price for our put below technical support. And this case, we've got 25-cent bid offered at $4.75. Well, gosh, how the heck can I figure out where I can get filled on that? Pretty tough. Right now, with option bid-ask spreads being so wide, you have to try and figure out what you would be happy getting. And so here on the 68.50 puts that are $2.50 closer to the money, you can at least see a bid. You've got a $1.76 bid offered at $4.90, and so you could probably get filled somewhere around $2.50 to $3, I would say pretty safely on this. Down to the $66 strike price, we would have to get somewhere in the middle of this, would put us somewhere around $2. I would say might not be a bad entry point. So let's also take a look at what kind of return we can generate on this particular play. So if we go down to 65, we'll just use round numbers. We'd have to put up about $1,300 for that trade, 20% of the underlying. So it'd be $6.50, $6.50, $13. Easy way for me to calculate it. So I need to bring in $1.30 for this $65 put right here. And I think that's pretty doable. $1.30 is pretty close to the midpoint between the bid and the ask. And it may even be shaded a little bit on the bid side. So we'll go a little bit further out. We'll use that $65 strike price because it'll give us a little additional breathing room. And you can see the pink line there is the 200-day moving average. The black line is the 100-day moving average. Really nice to have this in the option chain when you're a spreader because you can see where those support and resistance lines are. So the trade that I'm going to be suggesting to you is to sell the GILD May 1st $65 put. We're going to try and bring in $1.30 for this. So let me adjust the price right here. And for those of you who are Option Stalker members, you'll actually be able to use the staged order to place this trade. I'm going to put it GTC, and I'm not going to click submit. I'm going to click stage because if you are an Option Stalker member, you can come in and you can see right there, April 5th, sell one GILD, $65 put at $1.30. You can click submit and it'll be routed to your broker. You will want to adjust the quantity, and if you want a different credit, you'll also want to do it at that time. So that's it. That's a 10% winner. So today is April 5th. We've got May 1st. We have about 4 weeks. And if this trade works out successfully, then in 4 weeks, 1 month period of time, we're going to make a 10% return on this stock play. Well, Pete, what happens if the bottom of the market falls out and Gilead falls down to $50? Well, in that case, we've already stated we want to buy the stock. We won't be buying it at $65. We'll be buying it at $65 minus $1.30. So we'll actually own it at $63.70, $63.70. Look at $63.70. That's another support level right in here. It would have to take that out as well. And we are going to buy the stock. Now, if the stock drops that precipitously, what's going to happen to option implied volatilities that we talked about earlier? Put up VXX. That would mean that the market is making a new low. And it's going to be making a new low in a very big way, especially on a strong stock like this. You can expect that VXX to shoot back up, maybe even to the $70 level. Well, that means that the calls on GILD are going to go sky high. And we're going to be long the stock at $63. We're going to sell those expensive calls at that $65 strike price. And when the stock eventually gets called away from us, we're going to collect the call premium, and the put premium is what we're going to be up by. And mind you, when we sell that super expensive call premium at the $65 strike price, who knows? Maybe we could get, and actually we can go in and find out. We could take a look right now and see at $78, what might that $80 call be trading for that's got a month worth of life? And we'll take a look at that. And you can see the $80 calls with a month worth of life are somewhere around $5.50. Let's say we could get $6 for it. Well, that $6 that we sell that call for is going to give us additional downside protection on the stock if we are assigned. So this is really an investment strategy, but because option implied volatilities are so high right now, it's actually a really good swing trading strategy. Are the premiums going to exist like this for a long time? No. That's why we have to be using this strategy right here and right now while the VXX is still elevated and while we have another week to 2 weeks of horrific virus news coming out. This is when the premiums are going to stay relatively elevated, and then they will gradually start to come in May and June, and this opportunity will disappear, but another opportunity will present itself at that time. When the options get super cheap, the premiums, then we're going to start shifting our strategy more towards bullish put spreads, getting closer to the money, having more of a directional bias to the trade because we will have clarity. Super important. We need to see how all of this is going to play out. And so that's the strategy. Your market opinion dictates your option strategy. And your confidence in your market opinion also plays a role in terms of how aggressive you are with your positions and how you size your positions. Right now, we need to distance ourselves from the action. We know that there's going to be additional market uncertainty coming in. And so this is the best strategy, and we're able to take advantage of those really big premiums. But you have to find the right stock. You better spend 90% of your time finding the right stock because you want to make sure that you can own it and feel good about owning it. And so very easy search to use. Gilead was just one of the stocks in this list. There are many that I like in here. There are 4 or 5 that I could do right now, same strategy. So before I conclude this, I'm going to show you with earnings season coming up, I'm going to go into Scanner, I'm going to click Bullish, and I'm going to click Buy into Earnings. These companies all announce earnings in the course of the next 2 weeks. Now, unusual circumstance with the market pulling back so far, but we know that these companies are going to announce, and they've had a tendency to rally into earnings. So 75% of the time over the course of the last 12 quarters, these stocks tend to rally into the earnings announcements. So there are going to be some gems. There might be some gems in here right now, that will rally into earnings that would make really good bullish put spreads or naked put rights. But with every passing day, this list is going to grow and grow and grow because it always keeps that 2-week window where it looks ahead and looks ahead and looks ahead. And as earnings season approaches, this list is going to get longer and you'll have lots of stocks to choose from that should rally into their earnings announcement. And that's what we're going to be looking at when some of our options start expiring on April 17th expiration. We're going to take those gains and we're going to look for the next opportunity. And then once earnings season passes, we're going to be looking at companies that have posted and we're going to be looking for those post earnings moves higher and that relative strength, and that's going to set us up with another round of opportunities while we wait for clarity. So that's the game plan right now. It is Sunday around noon Central Time, and I don't know how the futures are going to open tonight. I don't care how the futures are going to open. I am expecting a bottoming process. I'm expecting this low to hold. If we go a little bit lower, no problem. I'm in the right stocks and I'm selling premiums that are way, way out of the money. So let all this herky-jerky action take place while I'm generating income on my swing trades. I'm generating a lot of money day trading, and we're loving that intraday volatility in the chat room. So this is my overnight strategy for swing trades. During the day, we have a completely different strategy, but we're able to generate income that way as well. I hope this video helps give you some clarity on the market and how you should be positioning yourself and what you should be doing. If you like the content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications, and you'll never miss one of these videos. Sometimes I release them before the market opens, sometimes during the day, but they always have great trading opportunities in them. If you don't turn on your notifications, you're going to miss trades like Gilead. I think this is going to be a really good naked put right for us. Thank you. Enjoy your weekend. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.